on this computer. Can you guys see that it's recording? No, I can't keep playing. We got 5 minutes. Or, I mean, it's time to start. I mean, it's a computer, it'll go fast. But anyway, I'm going to tell everybody in the chat. All right, guys. Starting now. Anyway, this is a really fun game if you guys ever want to play. It's like there's a zillion pawns versus, and all of these can become queens. All right. So, okay. Want it to look nice. So. Get rid of that. All right, so what we're going to be talking about today eventually is consistency when it comes to short selling. I'm hoping this is going to be a very good topic, relatable to a lot of people. And this is actually going to, you can also apply this to longs too. But because most of the people in here are short selling, I just figured I'd call it shorting. This originally was called what most traders can't do, which is why that's up here, but I changed the name to shorting consistency. Anyway, yeah, so still some people flowing in. I'm gonna give it the normal window of everyone being late because that's human nature. How was everybody's day? Great morning. Yeah, he's in Australia. Me too, man. He was an Aussie. Sick. Oh, buddy, sorry. Yeah, great morning so far. Dude, how are those futures last night, right? Like, dude, the second, I mean, anything you mentioned trade in China and it's not, here's the algorithm. If there's a PR and it says trade China, but it doesn't say tariff, market goes up. That's the algorithm. It's like you can almost do it with an Excel if statement. You know, if tweet, or yeah, if PR, if tweet says this minus tariff, then buy. Okay. You guys all trade what was it, EDSA? I didn't trade that at all today. I was hoping, I'm looking forward to day 2 tomorrow. Especially because it's Friday, we might get some kind of fun action on it. Nice. Yeah. More longers in the room. Anyway, I saw some guy talk. Steven. Getting done? Yeah, CTRM was a fan favorite. Dude, CTRM, I'll go over it. I'll go over it. When longs, that's okay. I did too, man. I was long CTRM. Oh, anyway, it is recording, right? Everything's recording. You guys can see this. See, I don't see the frame anymore. Like my frame's gone. Okay, cool. Yeah, so let's give it 1 more minute or 30 more seconds. Still a couple people flowing. Right on. That's nice to see. Oh gosh. Okay. All right, so it is now, all right, 7:05. Let's get started. So I'm guessing that most people in this room, right on, Steve. Cool. I'm guessing that most people in this room are mostly short biased. Um, but yeah, like I said a little bit ago, this kind of what I'm going to go over today can be applied to longs too. But most notably, this is a short selling small cap strategy that I like to use. And anyway, so let's get to it. So we're going to talk about key traders. I honestly didn't, dude. The only trade I made all week was today on CTRM. So I'm going to go over it. But like, and I count my start of the week because I do my webinars on Thursday. I start my week like on Friday, and it was just a slow week for me, you know. But like, I didn't want to force trades just to go over them here. I always feel that pressure that I want to force some trades to make sure that I have stuff to go over here. But like, man, I mean, it's just not my style. Like, I'm more of a, like Tosh said today, a 2 to 3 trades a week kind of guy. That's all I need. I don't need to just keep going. Like that's when I lose money. So anyway, we're gonna go over market sentiment, trader topics / fallacies that I like to include in there too sometimes. This week we're gonna go over strategy boards, strategy that I want to go over, and we're gonna end it with Q&A. So if you guys have any questions, feel free. At the end of the stream, I'm gonna go over all of the Q&A, all of the questions that are in here, and I'm gonna go over them one by one. So if you have a question that's pertaining to what I'm talking about at the time, you can post it, and like if I happen to see it, I'll go over it. If not, I'll get to it at the end. Sam, what's up, buddy? All right. So okay. So CTRM for me was the first resistance short, and I kind of originally when this first came up, it was just kind of a trade where, can everybody hear me? It was I realized this was over here. CTRM was a trade where the daily line of 5 was pretty prevalent, right? So I felt like that was kind of what everybody was watching, was the $5 line, and that's essentially, I wanted to treat this as the first resistance short. And this is a little bit of what I'm going to get into the specifics of this kind of mentality at the end of the webinar. But I basically covered this like a piker, but I was okay with that because for me, it was still front side and I was going for the front side cover. When it ultimately failed here, I was either looking for a continuation short or a reclaim. And I always try to go for the reclaims. Like I want to go for reclaims. That's what I like to do. So I kind of leaned towards that sign. The volume was really, really, really high compared to the 800,000 share float, right? So I ended up going for the reclaim, and it just didn't feel right. It wasn't like reclaims are supposed to be surprising, right? And this one just took a little too long, and I stopped out of that. But anyway, the specifics of my trades on this today, I just kind of quickly got in, quickly got out on both trades. Nothing big, but easy, stress-free money. The first resistance short was based on $5, and so I initially had a short here at 493, and it stopped at like 488. So I was kind of disappointed. So what I then instead did was, in case it wanted to pop up and stuff before it broke high a day again, I moved my orders down to 480 just to make sure that I would get the fill. And we got through, and we popped up to 5, and it's having its big 1 minute. I think what's his name, Furu, got involved here. And this flash happened so fast. I remember trying to add, and this was actually an error on my part. I should have had the order already in. Normally what I do is I let it pop up, and I have an idea of where I want to enter, and I'll have my finger on the button ready to go. And this just happened so fast. It just popped up there, and I hope no one got caught longing that in the morning. But that was a massive, massive, massive dump, right? So anyway, we get the massive dump, and it was so fast, and I immediately just kind of take it off on that pull, hoping that like it's going to consolidate more. Maybe we get a secondary push I can short into, or a consolidation where I can long for a reclaim. That's kind of where my head's at on this trade. So I get out, and I'm kind of waiting for my next kind of entry opportunity, whether it be long or short, right? And so I decided that like it's still trading very high volume. It's not giving it up yet. There are strong bids. There's some kind. If you were watching the tape in the morning, there was some kind of games going on with this kind of stock. There was high volume. We saw a massive stuff candle and a hold, and that's what made me kind of get interested in the long in the first place. So I decided to I tried to get in on this little wash here, and I kind of fat fingered it a little bit, but I got like 410, 412s fills, so that wasn't so bad. And so I'm basically like I'm green most of this trade, and I definitely have like a 405 stop. Definitely, if it's just gonna slam or tank, I'm definitely getting out there. But it's starting to work in my favor for a little bit. I have a very nice entry. I'm trying to be patient. I'm liking that the volume's staying high. The float's 800,000. We got 5 million shares on. We got 5 million shares traded on the day currently at around this time. So I'm feeling good about my entries. And then we get up here, and my goal is to sell like a third up here. My goal is to sell a third up here, like a third up here, maybe hope for a third, maybe up here above 5 on a halt or something like that. That's my exit plan. But up here, like I had like 436 sells, 435 sells, not, sell orders. And I just couldn't get the fill. And like, normally when stocks are about to reclaim, it's very easy to get fills. And I was having the hardest time filling, which showed me that there's still a seller in here. And right on this candle, kind of Furu guy got in again. And that was actually a tell for me, right? So the fact that this was a very critical moment. I know a lot of people were looking at the 440s, and 440 crossing over to 450 and 60 with that domino that Joe was talking about in chat, right? That was really kind of, if Furu Man and all of his sheep couldn't ignite the dominoes from here, I got really skeptical about its ability. So I gave it a little bit more time, and it just wasn't working out. And I essentially timed out of my stop, right? I didn't even price stop out of this because, like, I mean, it clearly didn't break down or anything. But I got out because this is not the thesis of my trade. VWAP reclaims are supposed to be surprising. They're supposed to be relentless to shorts, right? This is stuffing, giving more time, trapping, looks like it's trapping some longs. It's easily holding VWAP. I'm reading these signs as this is not what a VWAP reclaim is supposed to look like, right? So I'm just like, you know what? This isn't my trade anymore. If I stay in this trade any longer than I am now, I'm kind of breaking my process. Like, this is not the trade I envisioned when I bought this wash. When I bought this wash, I figured I'm selling some into the perk because you guys know me, right? Exits define entries. Why get into a washout if you're not going to sell a perk, right? Why short up here if you're not going to cover the pull? Same idea, right? So I end up selling half of my position when Furu Man couldn't get it up there. I just get nervous, right? I get nervous that like I'm in with a whole bunch of sheep now, and that's kind of the way it felt. So if I stayed in any longer, my process would have been broken. I had to get out, and this is just a good, it rewarded me today, right? Like, yeah. I got saved. My ass got saved, which is just building long-term habits, right? Over time, if I had overstayed in this and I had gotten this profit, if I had done that and got rewarded for it, I would have done it again, right? And maybe next time I wouldn't have been so lucky. Like, I wouldn't have gotten, like, this kind of held low a days right here. That was nice. On stocks like this, it can easily just tank down further, and like it's going to lose money over time if I don't follow the process as opposed to following it. So just keeping the risk management and saying this isn't my trade saved my ass on that trade. All right. So a quick interjection on process, and I didn't want to go over this, right? The following the process is not meant to maximize your profit on any given day. It's supposed to increase profits and consistency in the long run, but its goal is not to ensure gains. Like, you don't have a process to, the goal of the process is not to create gains, right? That's not a process's job, is to make sure that you make money, right? There's one part of the process that's supposed to ensure that, and that's the profit-taking part of the process. But the process as a whole, its job is to mitigate risk and to keep you in the game. That's the only job of a process, right? Is to not blow up, right? To keep your mind healthy for tomorrow's, because you don't want to miss out on an opportunity because you're so hungover on your trade, on your missed trade or messed up trade or loss from yesterday, right? Your process is designed to keep you following your rules, which will keep your mind sane. It will keep you in the game long term, because one thing that for most traders will develop over time is you will get an experience edge the longer you're able to stay in the game. But if you don't follow your rules in the beginning, I mean, you're gone in the first 2 years. Like, the people that I see on Twitter, I can't tell you how many traders are not on Twitter today that were on Twitter when I first started. They're gone, right? And like, you don't know if they're just being quiet or not, but I mean, you can reasonably assume a lot of them just blew up accounts because they didn't follow their process. They got stubborn on 1 or 2 trades, right? They tried to make sure that their process, they got consistent. They were making money consistently, but they weren't adhering to risk. And all it takes is 1 or 2 or like a bad week, right? Your process is meant to prevent against that. That's its only objective, right? It's essentially your game plan for a game, a race, or a sporting event, right? That's its job, is to prepare you so that you're on top of your game, and the game isn't on top of you. So that's a little quick interjection on process. So today, this week's market sentiment was significantly slower than the last couple of weeks, but it's not nearly as bad as it was in the summer. We're still getting a couple plays every single week. I happen to miss them this week, or they weren't my plays. I know a couple other people got trades. But yeah, the main like leaders this week, like that stayed positive, were EDSA, which was today, LCI, which was all last week, and ABEO, which was like I think 2 days ago. But everything else is everything that popped up kind of faded. And if you guys have been watching these webinars long enough, you guys will notice that there's always more red tickers than green tickers, right? But the green tickers are always so much stronger than the red tickers. So this is actually a good representation of how small caps work. And this is kind of what I'm going to be going over. But this is a good example of how small caps work. It's like with shorting, you're going to win most of the time, but you're going to lose big, right? You're going to lose big on these 3 names, but you're going to win on all of these names, right? If you're only short. And if you're only long, you're going to win on these and lose on all of these. So like just thinking about it, like if you're a longer, you almost have to have patience to be a longer, right? You need patience to be able to sit through and hold for larger moves because you know that larger moves are possible. And if you're a short seller, you just by looking at this market participant, like what's red and what's green every single week, it should kind of give you a clue that you're going to win most of your trades, but there's the one couple exceptions that you have to watch out for. And depending on whether you're a long or short bias trader, you can make money being both, right? But you have to formulate your process in a way to where it adheres to the style of what you're trading. Like if you're a long trader, you want to be gearing, in my opinion, when I form my long process, I try to gear it towards taking full advantage of the good risk rewards of my trades. And when I'm shorting, I'm trying to take full advantage of the probability side of my trades. That's why I'm always so conservative with my covers on shorts, right? But my long trades are always so much bigger, right? That's just what I try to strive for, because that's the innate advantages I feel in longs versus shorts that I want to capitalize on. And if you just look at the market participant, it's always a small amount of green and a large amount of red. That's just always the way it works. Anyway, yeah, so EDSA, LCI, ABO leading, carrying the momentum. The futures went absolutely nuts yesterday. The market is super optimistic about trade negotiations being back open. And I just made a joke, right? Like any tweet or PR that comes out on this about the SPY, if it has the words trade and China and it doesn't involve the word tariff, the market goes up. Like that's just the way it's been the theme of the market lately. And last week I talked about how the market seems to be a little desensitized to Trump tweets. I still think that's a positive, even though I took that off, right? One bad thing I saw this week compared to last week is that the runners aren't sustaining volume. You're seeing kind of stuff die off on volume throughout the day. And, that's a sign that the market is slowing down a bit, because the market can't stay on fire forever, right? It's a little hint that the Momo's starting to run out. And the reverse split plays have just been lackluster lately. Like OPGN, I think, was a reverse split play. It didn't really do much. Tops was a reverse split play. It didn't do much. There was one other one that just didn't. They've been kind of lackluster given their prior history. So that's one negative. I think those runners might be becoming a little bit what's the word? Everyone's getting a little too satiated with them. Like it's becoming a little too common. So one thing I worry about, but hopefully we get some new ones to reignite the spark on that. And Bitcoin's not gaining stream. That's like, I'm hoping for a big sector play to come. I don't know if it's going to come with Bitcoin. I don't know if it's going to come with marijuana or soybeans or whatever it's going to be. I'm hoping for a big sector run in the near future. And I still think we're right here. Like we were here last week. I still think this week and last week were kind of the same. I do think we're going to be like, I think CTRM was a little bit of a hint today that of what might be to come next week or the day before, that it might transition more from a longs can be free to buy to where a shorts can feel a little bit more confident in their shorts and things might gap and crap a little bit more often. That's just kind of the direction I see next week. OSN I counted last week, Oleg. But yeah, OSN was good, but I counted that last week. My week is technically, I guess, for me starting Friday to this Thursday because I don't want to double count content. But yeah, OSN was good. Yeah. But yeah, like back to what I was saying, I do think that we are shifting into maybe like next week or so. It might like shorts might have their turn, right? Longs had their turn the last couple of weeks. I think shorts are going to have their turn in the next week. So one quick thing I want to get over before I get into the meat of the presentation is why mixing lines is really bad. Like I think I went over this yesterday or this morning. It was one of the two, but it was something I wanted to go over more. Why mixing lines is really bad, and Joe and I have touched on this in another webinar. But it's basically the reason why it's bad is because you're essentially forcing two trades in one. And what I mean by that is, think about any trade you ever take. There is always a reason why you're in. And the reason why you're in is because like, if you're buying it, you think it's going to go to X from, it's going to go to Y from X, right? The exit is the reason why you're in because you think it's going to be higher in the future or lower in the future if it's a short, right? The exit is always going to define the entry, right? There's always like, if you want to sell at $10 and a stock is at, $7 tanking to $5, you don't need to be the guy that buys it at $5 and sells at $10, right? Because what's likely going to happen is if it goes to $4, you're going to stop out of the trade. It's going to go to $10 and you're going to, be shy about re-entering because you just lost. But even though it went to 10, you're still right. You see how that works? So depending on where you want to sell or cover, that almost tells you where it makes the most sense to enter to provide the least amount of stress on yourself, right? But also, so because of that factor, if you're trying to combine one exit with two different entries, very rarely does that happen, right? Like if a stock is washing out of the open and your exit that defined your buy right at the open is you thought it was going to gap and go or something, you thought it was going to gap and just ignite up and go from $7 to $10. Well, if it starts tanking to 5 and you say, well, no, that's good. That's a washout long trade. I'm going to buy that too. What you have to consider is after it's washed out, is your goal of 10 really feasible? And very rarely is that kind of going to happen, right? And then the question then presents itself, well, if it is going to go to 10, you can wait for it to get back up to 7 before you enter and risk the fact that 1, you might be wrong and it might just go back to 3. You risk that, you're taking that risk off of the table. And you're probably going to, knowing that, unless your timing is spot on, which let's be honest, how often is your timing perfectly on? You can probably get your same average on the after it's already bottomed, right? So just taking those two factors into consideration, you never, forcing two trades in one, it's very easy to blank or to put that in a category called conviction and say, oh, I'm being convicted in my idea. And when really you're just being stubborn and not letting the first idea die, right? If you let the first idea die, it's going to free your mind to think of a second idea, right? And this is where I don't think traders are very good at this, right? Like we're innately not good at being honest with ourselves. And this is why you have a process to kind of eliminate that decision-making from your trading, because having a process is meant to be there to protect yourself against bad decisions that you might make in the middle of the market trading day. So anyway, so normally, when you do this, you'll find yourself in this position. You're normally going to find that it's a big loss. Why? Because you're basically losing twice. And if you get stubborn with it, you're going to add unnecessary size to fix averages. and it's never a good idea, right? Always, this is why I'm very organizational in my mind about my trading. There's a box for this trade, right? There's a thesis for this trade. When is it invalid? Right, like my CTRM trade, I was like, this trade is not active anymore. I should not be in anymore, right? Being stubborn and being hopeful, kind of the same thing, right? I didn't need to stay in CTRM and be hopeful for it, right? That was me. That would be, like part of my trade buying on that washout was because it was a washout, right? So like part of my trade needed to be selling into the strength, which I did. But when if I was going for the VWAP reclaim trade, I don't need to be holding on to my position when it's already rejected it the first time. I can get out of that position, and if it curled back, I could have rebought over 440. For a fact, right? You could be pretty darn well confident that if CTRM would have broken 440 today, that shit would have lit fireworks, right? And I knew that all I had to do was wait for that, and why risk getting dumped on when I can just wait for that, right? If I'm going to be right, that thing would have limited up to 5. So what am I worried about? Like losing 10, 15 cents on an average when I'm looking to make 50 cents profit? These are the kind of risk reward questions that I ask myself. And this is when it's really good to make make distinguishing factors on when each trade starts and ends. And the best way is to create a thesis, create lines for each trade, and just follow it religiously. And so the one exception is if you can think about this, if a price target isn't your thesis, most of the time the assumption with this is that price targets are the thesis. You think it's going to get back to 5, it's going to get back to low of day. You have price targets in mind. The one exception is that there might be a parabolic trade in which your thesis isn't necessarily a price. The thesis is that this action is unsustainable. And this is a very, 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 very advanced trade. Definitely not a trade for beginners or low capital traders. And I have to say sorry, but just being honest, it's not a good idea if you don't have a lot of capital to even attempt a parabolic short. I mean, I know everyone, it's the glory trades, right? Because you want to get the top, but it's really not glory. It's really not glory when you see it on Twitter and you see someone nail a parabolic short and you don't see the 5 times that they mistimed it and didn't post it on Twitter, right? It's really not glorified. I don't take very many parabolic short trades, and when I do, I'm super careful, and I'm going to get into that. Yeah, I mean, parabolic shorting is probably the #1 blower upper of accounts, right? So the only exception to when mixing lines is kind of okay is when your thesis isn't a price, right? And it's an unsustainable, and the thesis is unsustainability, and that's not something that anyone in I mean, you should, I guess, try it in your first year just to figure out why you shouldn't ever do it again, or why you should never rarely. But hopefully you don't blow up on it. But we all do it. We all try it when we're new, and it never ever works out. Because they just go farther than you think. Right? All right. And so this is what I want to talk about. This is the strategy I use to get that has led me the most consistency when it comes to shorting and longing, but especially short selling in general, short selling small caps. I'm going to call it the powerful pair. And the powerful pair is the basic part of the strategy is that you need to start late and you need to start slow. This is the most consistent way I've found to short selling small caps, right? And so I'm going to go into it. Most traders are going to flock to one, and you're probably going to find that you do one of these in your trading, but not both. And so you'll try one of them, and it will kind of work, but not consistently. And then what you'll do is you'll try the other one, and it will kind of work, but not consistently. And you'll never ever try both, right? You'll never ever start late and start slow. And the reason why no one ever does both is because they're greedy. I mean, I am, it took me a while to figure this out too. It's because traders are greedy. And if you remember what I talked about in last webinar, greed and the inability to be grateful for gains is, in my opinion, the one reason why traders fail, is because they can't, they can't mentally win in their brain, and they just go down this downslope. This is what we talked about in the last webinar. It's a really, it was, I think, one of my favorites. So if you haven't seen it, make sure you go see that one. But yeah, not being grateful for your gains, right? Because you always want more, right? So most people will either start late or start slow, but never both. So, and in my experience in backtesting, one never cuts the juice, right? It's either one, you're always going to win small, and then like lose big. And the other one is you're going to get restless and never trade, and then just make an emotionally impatient bad decision. Individually, they can work, but your odds are lower if you're not exceptionally anal about being like particular and selective with your trades. So I'm going to define them here, right? So starting late. What I mean by starting late is starting after everybody else, right? And I mean starting, like making sure that you start after everybody else. Meaning, like if you have a line here, right? If there's a line here at 8, people think that it's not going to get there, and people are basically shorting, before 6. They're shorting before, they're shorting at 5. They're shorting at 6. They're shorting at 7, right? But there's a clear line here at 8, and this is the most outer line, right? It's like 775 or 8, right? Starting late to me means starting at the outer lines, right? Not scaling into the outer lines, which is what most people do, because nobody wants to be. These are the people who start scaling before the outer lines. Are the people who have FOMO, and they don't want to risk missing the move. They don't want to risk missing whatever move is out there currently. They feel like if it goes down without them, they're going to lose money. They're losing opportunity. They're going to feel really bad if they miss it, right? So most will start in on inner and build into outer. And this has some credence. Like this will work a lot of the times, right? But what tends to happen is people will start at inner lines and build into outer lines. And when you get to the outer lines, you're nervous, right? And so I want to define starting slow. So starting slow means at these outer lines, not only are you starting late, but you are starting slow, meaning at the outer lines, you're using a starter, right? And I know what you guys are immediately thinking, yo, how are you ever going to make money like that? Well, over time, if you win all the time and don't lose, you'll make money, right? But most can't do this, right? Most, if they do finally have the patience to wait for the outer line, a lot of times they're going big. And this is basically just putting them in the same situation as everybody else. They're putting themselves in an emotional state of mind. And what they're not doing is they're not leaving room for stock to beat expectations. By starting slow and starting late, you're leaving room for the stock to beat expectations. And I have to say this, let's face it, you as a trader have very similar expectations as to what stocks can or cannot do as everybody else. Everybody sees the same chart, everyone has the same idea, and this is why everybody loses, because like the market has an idea of what everybody has, everyone's collective idea of the range expectations of stocks are pretty uniform. And, if you just assume that you're, like it doesn't take a rocket science to figure out range, support, and resistance. And if you're basing your trades on that and everyone else is, then you all have similar expectations. And if you're starting big at the outer lines, you're essentially just using the same expectation as everybody else. You were more patient, but now you're just as emotional as everybody else, right? So by starting late and starting slow, what it's doing is you are opening the door to be the most patient out of everybody, right? Sometimes I think you have to do this in order to ensure that you're the most patient, which means you have the most edge, right? So Paul says, is this only for day ones? It can be, or can it be for day twos? I think this can be for day ones or day twos. This is like, if it's a multi-day, it depends on like, I would say most of this is going to happen on day one, like, but like, it certainly can happen on day twos as well. The point is like using lines starting at the outer lines and then at the outer lines using your starter, right? This is Now this is what I call doing both of them, the powerful pair. Most people will do one. Most people will start in here at like 550 or 6, and they'll start small. They'll be like, well, if it's not as good of an, if it gets to 7 or 8, it's a better opportunity, which they're right. It is a better opportunity. Everybody knows that. The higher it goes, if the idea is it's coming down, obviously the higher it goes, the better the opportunity, right? But what tends to happen is what they're doing is it's scaling up, and they're slowly adding as it goes up. They're trying to be slow, but the size is accumulating. So when it does get up here, they get squeamish. And essentially their edge is gone, because when you're starting slow, you eventually want it to get up here. But now when it's up here, you don't have the same average as someone who is just now starting late. So now it's like a war of whose edge is going to win, the people who were slow or the people who were late. But both sides are using the same range expectations. That's the assumption, right? Everyone's having the same expectation. So what basically tends to happen is, like, someone can be starting in slow and withstand this, right? They can be starting in slow and withstand, and then they get the pull and they're like, yes. But where's their average? You and I both know that their average is down here somewhere in the 650s, right? Assuming they get ads up here. Their average is here in the 650s, and they feel relieved, but also their patience has worn thin. So what tends to happen is any kind of perk up here, and they're getting out. And I'm trying not to be a guru. I didn't trade this. I just picked this as an example, like, because it was moving. Like, I'm not trying to say, well, I would have made money here. Like, it's not what I'm saying. But I'm just trying to, like, this is just a good example of, like, someone who was starting slow and building into here, doing one of the two. When they get this pullback, they're like, yes, time to make money. And then they get up here and their emotion, their patience is run out, and they end up covering here, and then they're like, oh no, I just covered right before the tank. How did that happen? And it's because, like, what probably on this push right here, it's like they survive this push and they wait, and then they're like, oh well, I just can't do it anymore. I'm red. Like, maybe I should have covered it on the dip. All of this stuff. And so this is the example of somebody who started slow, right? Now, for the person who started late, these guys are probably like waiting until it gets up here, and they have a different kind of problem. They're going in late, they're slamming it up here, but then they're also getting nervous when it pushes up at 8, or like assuming they don't get the very top, right? Say they get like 730, right? They don't get the very top. They're still nervous. They're afraid it might go to 8, and if this chart could have panned out a little differently, where it popped a little over 8 and maybe they covered there before the drop, or they short here, they get the pullback, and then they feel bad they didn't cover, and they cover up here, right? Or God forbid it went back to a test high a day. A lot of times people cover right up there right before it tanks, right? And so these are good examples of doing one and one, but most people don't want to do both, because the drawback of that is they might not be full size for the tank, right? And so what does this basically capture, right? And the reason why I have to hand draw my charts is because I don't want any kind of copyright infringement, right? Like if I steal a chart from YouTube or Google, like, and it happens to be from any other site, like, I don't want them, like, so I just draw it. So sorry. But like, basically this captures the higher probability outer line trades, right? Because I don't think anybody would disagree that when a stock gets to an outer line, it's a higher probability. This is basically the thesis behind when people start in slow and say, well, it's an okay opportunity here, I go really small. It's a good opportunity here, I go medium. It's a great opportunity up here, I'll add most of my size up here, right? So everyone, even the guys who start slow, will agree that it's a better trade if you can wait for that, right? But what starting slow and starting late does, it puts you in an I'm ready to nail this move at the outer line. And when you start at the outer line, most people are banking on the outer line to hold, right? Most people will be banking on that outer line to be the end game. This is it, right? But most people, if they started slow, they're in crap my pants mode, right? They're in, okay, we're at the outer line. I got my last ad. Please tank, please tank, please tank, please tank, please tank, right? Like, my last hope, this line has to work, right? Has to work. And this is what we kind of got into this last webinar too. the desperation feeling of when a trade has to work, your edge is gone. Right? You're not trading in the right mindset to have an edge over anybody. Right? So what this essentially does, and this is, I think, the best sentence I can put it, is it attempts to put the idea back into the thesis of the short. And the thing about shorting, and I say this many times, is shorting is 100% about timing, right? The people who try to just survive the move and keep adding will eventually blow up, right? They're eventually going to blow up. And because what they're trying to do is it's not that they're dumb, they recognize the problem and they see, man, I know this is a short, like what goes up must come down, right? Like as long as I keep adding, I should be able to get the cover, right? True. But that's what they're trying to do is essentially trade the idea of a short, right? Because we all know they're coming down, but that's not good enough for a short, right? Because shorts rely so heavily on timing, and you have to, like I said earlier, you have to avoid the 1 or 2 or 3 that are going to blow you up. Shorting ultimately becomes about timing, and trying to just add. Basically, what they're trying to do is emulate what I'm kind of putting into this, what I'm trying to get across here, is I'm trying to put the idea part of the thesis back into the short, because the idea part of a short is the high probability part, right? We are all very high it's a high probability in our minds that these stocks are going to come down eventually, right? So we're trying to put the idea back into the trade by taking some of the timing out of the trade. But the difference is, instead of adding the whole move, we're literally waiting until it's so prime, and then we're still being careful. So by doing this, we're allowing the idea to get back into the head, because now we're really, like, if we wait for the outer line and then start, we are really waiting. We're really giving this all the room, like, that can probably reasonably, like, be given to the stock. We're giving it that room that it can without putting yourself at excessive risk for your idea to pan out, and most likely you're going to end up with a win on the trade, and you're getting a high probability win with a low risk, right? And that's what the goal is in shorting small caps. You want the high probability trade with the low risk, not the high probability trade or the high probability short with the high risk, right? And that's what most shorts are. So what this strategy requires is extreme patience, right? You have to be okay with not shorting it here or here or here, right? Whatever your outer line is, that's the line that you got to wait for, right? You got to be patient for it. And the extinguishment of greed is an absolute necessity. You have to be the guy or girl that says, it's okay if I don't make the most amount of money on this trade. My goal is to come out of this trade green. And I want to be able to take this trade every single time I see it and be green. Because, like I said, the name of this webinar is shorting consistency. It's not shorting for max amount of profit, right? And that's what I wanted to highlight here. Is like, you can't have a lack of desire to size up quickly. I mean, you have to have a lack of a desire to size up quickly. You can't be taking the strategy for good, perfect, and running it with it perfectly for a couple of weeks or months, and then say, all right, I got it. I'm just going to do everything that I've been doing, like, with an extra zero. Like, you can't do that. Like, it's going to ruin it. And this strategy requires a priority of consistency over total profit. I'm going to be frank. This is not the best strategy for building the most amount of profit, but it is, I think, the most consistent possible strategy for shorting small caps, even longing them too. But anyway, yeah, so basically this is an example of shorting using this space, using, like, scaling into this line, starting in slow and adding your final one here. And this is more of what I'm talking about. Your range is up here. Your outer line is here, and you're giving it room for you're allowing it to beat the expectation that everybody else has. You're starting in at the outer line. If technical analysis wants to be great, the high probability technical analysis final outer line wants to work, great. Great. You have some for that, right? if it wants to break expectations, which stocks very often do, probably more times than not do, you're ready, whereas everybody else is not, right? Everybody else is, what they're doing is they're starting in here, they're covering, they're getting their last add here, and they're covering right up here, right? Sorry, I'll get to the question. Wouldn't you be scaling after the last resistance breaks, though, as in that line isn't really valid anymore? Should you move on to the next one? So ideally, what you're doing, the thesis of this strategy is that you are using the last line of resistance, right? And if it does break, what you're allowing for is it to break, in the realm of just a very large fudge factor, right? Because like normally stocks that are up this high are going to have too much emotion in them to follow the lines absolutely perfectly. And if they do work perfectly, you're in, right? Like you're starting right here at the most outer line. I see what you're saying though. Like if it breaks through the final resistance, isn't your thesis valid? That's only if your resistance is very one-dimensional, into the sense to where if $8 doesn't break, I don't know what will. Part of your thesis can be this is a really overextended move and that I'm shorting into the front side because it's overextended. And part of the thesis behind the trade is the unsustainability. It all depends on what your thesis is. And normally when you're trading this kind of move, unsustainability is a part of the trade. Now, it doesn't necessarily have to be a parabolic move, but it could just be like just a stock that hasn't given it up all day, and this is typically the kind of stock that you're going to see. And if it does go parabolic here, the good news is you're only in your starter and you do have a little bit of room, but by here, the move is absolutely ridiculous, and you should be getting a reward, I would say, more times than not. The most consistent thing that's going to happen is you're going to get the final pull after the exhaustion of the outer line happens. So it all depends on your thesis. So, right, you're scaling into the upper fudge factor, because where does everybody lose, right? Everybody loses on the fudge factor because they're stuck here, because they started too slow, or because they put all their faith in, like what you said, they had a one-dimensional thesis at the outer line. They're like, if the outer line doesn't hold, I don't know what will. And they're so confident in that outer line that even the people who started late but didn't start small, they started late and started big, are still getting out into that exhaustion, right? Because like the goal of this strategy is to take advantage of the outer line plus exhaustion room. Now, I gotta go to the next slide for this. So what are because it gets right in here. So what are the drawbacks of this strategy, right? You are gonna miss more. You're like, that's not even a question. You're going to miss more trades. You're going to miss more trades. And you're going to have to be okay with that if you want this strategy, if you want to even try to adopt this strategy. You have to be okay with that. The drawbacks, another drawback I didn't put on here is it's not going to maximize profit necessarily in the short run, right? Because you're going to be missing more. You might be trading less. But if your trading is so inconsistent, maybe it does help your profit, right? It all depends on what you're seeking. If you're seeking greater profits, this might not be the one for you. If you're seeking more consistency, I think this is a good strategy to try if it suits you, right? So you are likely going to be half size or less for a lot of your trades, right? That's going to happen, right? And it will test your patience. But here's where I want to tackle that, right? So are you really smaller than half size on all of your trades? Is that are you really smaller than half size? And is that really a drawback? So the first thing you have to ask is, what is half size? And the thing about that question is, who knows what your half size is? Who knows this information? The market doesn't. You are the only person who knows what half size is to you or not, right? So it's only in your mind what half size is, right? Half size, it's only you. So let's say this is the only strategy you trade all year, and 100% of your trades, you only ever get half size. Half size has become your new full size, right? size is only important, like size only has meaning, half size only has meaning if you put it in relation to your other trades, right? That's the only time like half size, quarter size, three-quarter size, full size ever becomes relevant at all, is when you're comparing it side by side with the size of the other trades that you take. So if this is the only trade that you ever take, this strategy, all of your trades are going to be full size, right? And then so basically what this is and I don't want to get in too far in this because I want to save this for another webinar, but it basically means that you're trading below your means. And this is, I think, a huge edge. When you trade below your means, like I've talked about this before, like your mind is clear. You have an edge, like, because you honestly just don't care, right? The money, you care, but the money matters less. It's like if you got like zillions of dollars, really, like, it doesn't matter if you lose 300 bucks. Do you know how easy it is to make $500 when you have like a $5 million account? Like, it's a lot easier to make a smaller percentage of your account. It's also a lot easier when you don't care, when it's like a video game, right? When you enter into that money matters less mindset, like trading becomes a lot easier. So by trading a little bit below your means, you're always going to be in the I'm ready to nail mindset instead of the oh shit, please tank mindset, right? So basically what this does is it puts your trading a little below your means. And the cool thing about this is that the size up process for this is going to be the same, but it will be smoother, right? If you're always at so traders have like a limit to their patience where they start like a size limit to where they can trade rationally, right? If someone is trying to size up, from here to get to here, that size up is going to be so rough. It's going to be bumpy. It's going to be full of emotions and self-doubt and upswings in your P&Ls like this, right? But you can go the same slope of a size up, but instead of sizing up at your starting from your limit and sizing up here, what if you started down here and moved up, right? You can go at the same slope, but it'll be a lot smoother, right? You're still sizing up at the same rate, but you're starting from a lower, you're starting from the bottom diving board, right? You're working your way up from diving board to diving board. It's like you want to become the guy that gets to the high board. You don't start at a level, you don't start trying to size up when you're close to your limit, right? You don't want to start your size up when you're close to your emotional limit. You want to start your size up from a level to where you're really comfortable, and that's going to make the slope so much smoother, right? So the size up is the same, but most traders won't do this because they're impatient, right? They can't wait to be making the $3,000 gains, $5,000 gains, P&Ls that you guys see, like your heroes or the people on Twitter posting. Most people can't wait to get there. That they're trying their size up. They're trying to start sizing up like right from the get-go at their threshold. That's a bumpy ride, right? You need to, what's going to end up happening is whenever you size up, your threshold gets bigger. So by sizing up on down here, you're moving both slopes. You're moving your threshold higher as you're sizing down your lower than you're below your means trading. They're both going up linearly, but if you're always trading on this line, you're going to be emotional as fuck, and it's going to be a bumpy ride. Whereas if you're sizing up on this line, you'll eventually get to your threshold in no time, and now your threshold will be higher. And this is, I think, the proper way to size up, is to start by trading below your means and sizing up to your threshold. And by the time you start trading your normal threshold, if you sized up slowly, now you're going to be comfortable at your normal threshold, and now your threshold is going to be up here. The idea is that you shouldn't be trading at the top of your threshold. You should always be trading below your threshold, always be trading below your means. And this is kind of what this strategy adopts, that mindset, and I think it leads to more consistency over time. At least it has for me. And so So another question is, what happens to me now when I get full size, right? If you're always in half size or not full size for these kinds of trades, which is going to happen a lot of the time, normally one of two things happens when I get full size with this strategy. If I get full size with this strategy, it's normally because it starts to go really parabolic, or kind of it gets really covery, like short sell covery around the top. And one, I'm ready for it, right? Because I started late and started slow. I'm actually welcoming that. Hey, it's actually a good idea. It's actually a good opportunity to get more size on, finally get a good size on a trade. But now you're getting good size on a trade where you are like higher probability to win, because it's higher probability, the higher the better, right? We discussed that. So I normally get rewarded nicely, and normally it's pretty immediately, like within the 15 minutes of it, like start to get full size. I normally find myself profiting pretty nicely. But the other thing is that maybe it shot past, and now I have become just like everybody else, and I have to rethink about my thesis when this happens, and I have to say, what was I early? Did I underestimate the range, and is the stock beating my expectations now? Was being slow and being late not enough? And sometimes that's going to happen. I don't think it's going to happen very often, but most of the time I'm going to win, and I'm going to win on small size or half size, whatever. But sometimes I do get to the full size, and normally, unless I get paid right away, like it goes parabolic and slams down, and it's a nice profit, like OPGN or something like yesterday or something like that. Normally, I find the best thing to do is I'm like, whoa, I really wasn't expecting that, and I just cover on the dip. I mitigate the loss and move on. And what allows you to do that, is because now you started late and started slow, you're in full control and you can see it clearly. When the stock's at its most emotional point, when it's going parabolic past the outer line, is normally when the exhaustion tends to happen. Now, instead of, you are in the trade, but at the stock's most emotional time, you're totally fine. And so you can clearly assess if it's going to happen like the first one, like maybe you're going to get rewarded nicely if you're a little patient, or maybe you can say, you know what, F this. Because you were trading below your means, the stock is now getting to your risk threshold. You can still think clearly. It's the first time it's happened probably in a while, but you're still thinking clearly because you're still under your threshold of risk, and you can decide clearly, maybe I should cover this on a dip. This was stronger than I thought. I'm getting out, right? And the same thing, that all this can be reverse engineered for a long, right? Stock starts to dip. You don't want to be the guy scaling into the average dip, right? Like hoping that 5's going to hold. Like, this is why sometimes I'll wait for like the support level to crack, and I want to get in right under the crack and start, right? This is as long as it's within the first 15 minutes. I don't get crazy trying to buy stocks that are failing like CTRM. But the same thing can be happening all along. You start slow and start late, and you can, most of the time, you'll get a good trade out of it, because super ridiculous moves rarely happen, right? And this is what I talk about in 2 webinars ago, right? Like, draw price action. What doesn't tend to happen very much, right? Stocks don't tend to go to their outer lines and then like completely break the outer line. That now you're getting into like the black swanish kind of stuff, and that's where you're gonna be under control because you started slow and started late, and you can be like, yeah, this is starting to look black swanish. I'm getting the F out, right? So I think that's most of what I wanted to talk about that strategy. I hope you guys got something out of it. Anyway, that is I think that's the most consistent way I can see shorting small caps. And you'll notice it's not the most glorious, but it's, I think, the most consistent, especially for somebody who's really struggling, right? As you get more comfortable, more experience, and you get your confidence out of the, into stronger turf and territory, you can try to start adopting other strategies like the first resistance short. That one I don't think is as consistent as this one. Like, it still works pretty well, but really being patient and slow, it's really hard to not get a green out of that trade, right? It's really hard to not get a green out of that. because like you're just being so overly patient, even if it's a small green. That small green, like I said, will scale, whether it's $10. If you're always making $10, if you're always making $10 and you eventually move that to $20 and $40 and $70 and $100, it'll eventually scale up. But most people want to, start their size up scale from their threshold, and it doesn't work. So most people are one or the other, and like this strategy is waiting for both. And this is actually a really good one for PDT traders, I think, because they want to be super selective with their trades, right? So this is the best. Like you only get a couple trades a week. Wait for the really good ones like this, and then start slow. So you might end up wasting a lot more locates. So that's a factor, but it's really hard to trade under PDT. It really is. But anyway, yeah, that was that. So I think we can open it up for Q&A. And also, like, if you guys have like questions about like the webinar and stuff, you guys can ask those questions too. I don't aren't you like breaking your thesis if the final resistance line breaks? That's a good question. It all depends on your thesis. Like CTRM on today at the 5 line. Yeah. So that's actually, I said I was going to go into it. So CTRM at the 5 line, that's essentially what I was starting to do, right? I was essentially I was going to start close right under 5 and then go, right? And then go. Like I saw 5 was the line that everybody wanted, and I was going to start really small there and go, but then it stopped, and then it kind of turned into a short off high day kind of trade. But yeah, originally when I had a 493 short, I was going for that. Like I was willing to go up to like 550, 570 probably. I was willing to go a little bit further, like up to this 580 line. But then when we stopped hard at high day, I was like, okay, this turned into it. The trade I then took was not a start slow and start small thesis trade. The trade I went into was now risking off the high day kind of with slippage kind of trade. But yeah, originally I had I had orders out in the 90s and I was ready to go because I felt that was the top of the range. I felt 5 was the outermost plausible line when we were opening from like 350s. Anyway, I'm just gonna make sure. I know I have one question from Flash, and it's in my DM. So it said, "Hi Austin, I have a question. It would be great if you could address this in today's webinar. I need to leave for work now." Okay. My question is, why did people short CTRM at 5? I see the data resistance at 5 from 7, 29, 19 with 440K volume. That's not a huge resistance. It was a nano float, history of gap and fail, 425B without effect, but we're in a runner's market, right? Am I missing something? Thanks. Yeah, so that was a good question. I actually thought, going into today, I actually thought the momentum was kind of dying. Where are we? Daily recap. I actually thought the momentum was kind of dying. So that was kind of in my mind. I was thinking that there was a first resistance short possibility. There was definitely in my opinion, there was 5 is the outer line, and you want to kind of use that, and then go for the exhaustion buffer after. So that was also in my mind. I kind of had a couple different ideas with that because it lined up with 5 so perfectly. But what he's asking about is that there wasn't a whole lot of volume on this day, right? And that's true. But volume is one factor I look at. I also care about like most reasonable line, most plausible line. It might not be the most volume line. Certainly, this would have been a better trade, right? If we had gapped up to 7 or 750 and then pushed all the way up to 950. That's the better trade. I agree with that 1,000%. Right? I agree with that 1,000%. Like this would have been a way better trade than this one, just because of the volume difference. But because like it's really unrealistic that it's going to get up here. Like what level's the best level to play off of, and that's why people pick 5. One, it's a very psychological whole number, and there is this very nice defined, like a well-defined line is very sexy to short traders, right? If it's very defined, traders like shorters like that a lot too. So volume counts and well definition counts. Those, like, I almost count them evenly. Now, I obviously will pick one that's well defined and with volume. I'll pick that line, 10 times out of 10 over the other one, or just one alone. But like what line can you possibly go for, right? Is the next one here is like 580. So had a FOMO bad average, you probably sold me your shares. Up there, yeah. Oh, did you start early, Oleg, on the short, or or on the long? Did you buy it up here? Long to 27. Oh yeah. Oh, and if you, man, in the chat, if you guys look back right here, there was a moment in chat where I talked about, I said, I really hope I really hope CTRM doesn't pop right over here. Right over here, I said, I really hope CTRM doesn't pop because I don't need that kind of FOMO in my life, or something like that. I was like, I don't need that in my life right now, because like I had a fear that it might just go up, right? But like my process says, don't buy the first perk. Always wait for the second perk break, right? That's like don't buy the first one. And my process says that, like, I'd much rather be buying the break over here over 440. So like I was like, so when this popped up, I like scooted back, and I'm just like, right, like FOMO is a killer, right? Like, and by not FOMO, like I would have been so mad. Like if I would have bought up here, I'd be selling down here, right? Like especially after this kind of stuff. Like how can you stay in the trade after something like that, right? As a long, you can't, and that's why like FOMO entries, it's so important not to do that. And like it's, I mean, I feel like this is talked about every single day in the trading world. Don't FOMO, don't FOMO, don't FOMO. But like every single day, we're cursed by this same disease every single day. Oh, what, you got it over here? Oh, okay, yeah. Well, yeah, and so so this is an example of, I think, an anticipation buy, right? If you're buying over here, what's the difference? If you're a longer, what is the difference in buying 435 or 427, 435, whatever, before the 440 break, or getting in at like 35 or 37, if it has the potential to go to 5? Like at one point you're buying right before it breaks, and the other one is you're buying after it breaks, and you have the potential for the domino effect, the limit up, that the reward potential is so much, like the probability of it going to 5 is so much higher the second it breaks 40 as opposed to right under 40. It's like you are going to get some slippage. But like then you have to take the slippage in consideration for what the trade can yield, right? Is the 10 cents, like say you're going to sell at 4, is the 10 cents extra slippage really that big of a deal maker that you don't want to take, that you'll not take the trade if it breaks 40? And like that's kind of, you have to judge, like, can the reward supersede the slippage? So Al just said, sorry, just got to the webinar, but first resistance is for advanced traders, right? You wouldn't recommend it for beginners? Because I don't think first resistance is actually that much of an advanced trade. In fact, it's actually one of the trades that you can kind of be robotic about, because you can put your stop, like it's one of the things that you can pre-plan. You can put your short order in, and you can put your stop order in, move back from the desk and say, I wonder if I'm going to make money. Let's see. Right? It's actually kind of a good one, I think. Because like what's not good for new traders is to be guessing. That's what's not good for beginners, right? To be judging off, like any trade that relies on tape, any trade that relies on parabolicness, any trade that relies on like patience on a stock, knowing it's not going to be easy, being annoying, trying to get the top. These are the kind of trades that you kind of want to avoid, right? Where there's a whole lot of elements to the trade that only experience can really prepare you for, like patience, like holding along through a stuff, right? These are the kind of trades you don't want to be doing as a new trader. The kind of trades you want to be doing are the ones that you can pre-plan, the ones that have a solid thesis behind them that's time and true tested. These are the easy. I think first resistance is kind of a good one because like you can put like you would have like depending on you could have gotten dicked on the average, right? This would have been a great first resistance short, right? I was going for originally I was going for the first resistance short kind of right here, and like that was one of the things I was willing to go for was the first resistance on 5, and the order was there, and like I missed it by like 3 pennies, but like it tanked like to 540, which and I guarantee I would have been I would have had that covered there. I would have been right here on the cover, like I would hotkey that shit right out, and that's being fast, right? This is a trade that you could have had your stop in ready to go, right? But normally, like you really want it to be the first time, and depending on how tight you want to be with when it says first, right? The first attempt. This would have been a good one the first time it gets to 5. At this point, I had another trade in mind. I was trading off here with slippage, but you could if you had the first resistance short idea, it would have worked fine. Like I don't know where your stop would have been. This is kind of where you want to give it slippage, I guess, especially with I almost said his name. Especially if Warrior. Oh, I'm not supposed to do that. Especially if Furus get involved right there. Like, I mean, you kind of got to give it that slippage on the first resistance. But, like, yeah, I think it's a very solid setup for new traders to take as long as you have a hard stopping. Yeah, there should be a well-built criteria, right? There should be a clear, like in my opinion, I should honestly make one for you guys, but that's getting into the realm of advising, and I don't want to get into that. But like what I look for on a first resistance, I want to see a solid daily level, right? I want to see that level somewhat far away, some kind like what Bao was talking about today in chat. There needs to be some kind of extension to get to that level, and then it's a pretty solid trade, right? Like if it's the first time it's getting there and it's getting there through an extended means, like parabolic extended means, no consolidation, no pullbacks, just no trends up there, like just a straight parabolic extended move up to a first resistance. That's a solid thing to have in the criteria too. Some kind of you don't really necessarily want to do it on stocks that are like rotating their float, right? Like if it's like a super low float and in the first 5 minutes of the day it's got 5 million shares of volume, that's not something you want to be doing. If the spreads are really shit, that's not something you want to be doing. If it's really illiquid, not something you want. You want to have criteria for when to avoid them too. But yeah. At what point did you realize it's probably time to take off? You mean today? Oh, or in my CTRM trade? Oh, like in the CTRM trade? Oh, yeah. So basically, like, this is when I thought it was make it or break it, right? I was like, all right. And I was on your side, bro. I was like, sell, come on, sell. And then, like, up here, I was having a really hard, like, I had 36. And then I moved it to 35. And then it popped up, and I saw my order on the ask with, like, a shit ton of other 35s. And then I move it down to 34 and 33. And I'm like, bro, what's going on? Why is it so hard to fill up here, right? It was so hard to fill. And that's not good, right? It's normally very hard to fill at the top and very hard to fill at the bottom. So, and I also got alerted that like Furu got involved there, and I'm like, bro, if the Furu with his sheep couldn't push it up, there has to be a seller there, and that's why I decided. And then I moved it down to like 30, and I think I got like 32, but like I took half off right there because I'm just like, there, it's clear like it shouldn't be trying this hard, right? It tried here. I thought it was gonna go here. I thought it was gonna go here. I thought it was gonna go here. And when the Furu couldn't do it, I was like, it might not be in the cards. I mean, that was honestly a tell. And I was like, and here it tanks, and I'm giving it one last chance to come back. And when it doesn't, I'm like, I can't be in this anymore. I just can't. I had to. So that was my thought process on it. I want to make sure I didn't miss any. Oh, that was last week. This is last week. Crap. Okay, starting today. Don't think I missed any, but I want to make sure. Olsen twins, yeah. The powerful pair. And little did we all know, like back then, she had a sister who became the Red Witch, or Scarlet. Oh, I mixed her up with the Game of Thrones person. Bro, I just remembered. Aside from tape, how do you know it's perking for a teleport up or a? How do you know it's perking for a teleport up or a wash? It got really slow at the. Like, how do I know like if it's perking, it's not going to teleport or totally stuff? Well, you don't. You don't. And that's why I'd rather up here. I'd rather not anticipate, and I'd rather let it break before I do buy it. If I do buy it up here, the only rare time that I will is if it's the only time I will is normally if it's like not over here. Normally it's in like the first like 15 or 20 minutes when it's really emotional and it just and I totally see a trap that I think just totally happened like on an SSR, and like I think like the SSR is gonna create a domino effect on like maybe like this level. Like if this was on SSR and like it had like immediately popped back right here above the up, I might be putting some on, hoping that these stops trigger right. But and it's got to be a pretty low float in that. I'm very often not anticipating. If it took this much time to set up, I'm definitely not anticipating, right? They both get really slow before they go. Well, I think what you mean by slow is the volume dwindles and it gets really tight in range. It seems like it's going slower. This is because everybody's kind of deciding what it's going to do, right? And so you don't really know what it's going to do, but my rule of thumb for whether it's going to teleport or it's going to wash on me is shorts are typically more afraid of their positions than longs are, right? And you can kind of agree to this because nobody ever thinks about short bag holders unless it's on an intraday basis. Like you always hear about long bag holders, right? Short, what I mean is shorts sweat a lot harder than longs do. And I know I've been a long and a short. Shorts sweat so much more. One, there's unlimited risk. Two, teleport candles are so much stronger than wash candles. Like this was a good win. Like if you had shorted at 425 and got this like cover at 375, right? Or like let's say you covered here, and your average is like 370, right? So you made 55 cents a share, right? You made 55 cents a share, and that's a good job. I would have got that in 2 minutes on the long. I would have got that in 2 minutes, maybe 1 minute. I would have got more than 50 cents a share in 1 minute on the long side. And that's just still kind of the way small caps work. The up moves are just so much more explosive. This is kind of why shorts are just so much, they're always sweating harder than longs because like this is more typical of how longs will go down the crack. There's a chance it comes back and so people don't sell all and then there's more selling and decaying because longs are bag holding. There's not as much, like stocks go down slower than they go up, right? So this is why shorts are generally more fearful. So note by recognizing this, I always expect teleport candles to happen pretty fast. It shouldn't be very anticipated. Like there shouldn't be given a lot of time for people to be like, wow, you know, this one might rip up. You know, it might rip up. Like I think it's gonna go. Like it's totally gonna go. Like I should be buying this. Yeah, I'm gonna buy it. Like the longer it takes for longs to get in, like the more of a long crowd it's kind of creating, right? The more of a long crowd it's creating. Like the edge in longs is that they happen so fast and that like it's so surprising and it's just so explosive that there shouldn't be a whole lot of time to get in. And the longer it takes to get in, the more I feel like I'm just with the crowd. I actually messaged Joe today, like we were talking about this, and we were like, man, it's gonna be a good long. And I was trying to get him to long it too, and like he was thinking about it. But like we were talking about like how like, oh dude, this is totally setting up for a long. And that was when the stock was over here. And the stock comes over here, and it's like, okay, it's still going to be a long. Oh, it's looking like a long. It's looking like a long. Well, how long is it going to look like a long before like it actually works? Normally, the longer they take, and that's why I approach a time stop with a lot of my longs, is they should kind of happen in the time frame that I expect them to, right? Like The longer it takes, the more I feel like I'm with the crowd, the more I feel like everyone's on the same page as me. But like, it's not like I promise you I would have been right back in over 40. Like, yeah, I got out on that, but like that's because like it hasn't broken yet, and I felt it should have. So like I'm getting out, eliminating the risk of the dump. But if it comes back, yeah, I'm gonna lose my average. So what? If it's going to 5, I don't care, and I think it could have. This asshole. I shouldn't be. I need to be better about that. It's after hours. It's after the presentation. But yeah, he did. Didn't he say domino? I think he did. Someone said he did. That was such crap. What would be an A plus criteria for a VWAP reclaim zombie hour? So honestly, like I just like mid morning or like no more than midday. I don't like the afternoon ones as much. Like they are good. They can be good. I've just seen so many in the afternoon ones that don't work out, but there are some good ones that work out in the afternoon. My favorite ones are the ones that like where shorts get too comfy in the morning, and like I VWAP is a level like I want to group together VWAP and support. Like sometimes it's a support level that I care about. Like this one, I was really concerned about 4 being the whole dollar level, right? So I was watching this 4 crack over here. It tanked over here, tanked over here, tanked over here, stuffed and held. Like so, I was kind of watching 4, but also VWAP too. I clump them together sometimes. But A plus criteria, mid morning. No, like for me, it's like no more than the midday. Like if it hasn't happened by midday, sometimes I don't think it's gonna happen. So that's the time. I do like to see low floats. Ideally sub 5 million shares. Ideally, it's a good catalyst, like something that brings hype. Like I don't know, like anything with the like if the weed sector's going off and it's a weed news, if it's got Walmart in the name, if it's like a swing to profitability, anything, any catalyst that like people might want to dip by. Like that you can think that like the new, like maybe new traders might try to dip by, like there might be, you know, like there might be a reason for an algo to catch on to it. Something decently positive. Like I know it's gonna be shit, but a lot of times it don't have to sound like shit for it to catch ears. Can you show? Oh, this is one right here. That is a stuff move. This is a stuff move right here. See this? See this volume push right here? This volume push right here? And it happened when it pushed way up into 430s and everyone thought it was gonna break, and then it just massively slammed. This is the picture perfect example of a stuff. There actually used to be like there used to be such a good like setup, like, and it doesn't exist anymore, and it's such a shame it doesn't exist anymore. I hope it comes back around the circle, but there used to be this one setup where like a stock would push up in the morning. Normally Furu was over it, all over it. It push up in the morning, and then it would do this like consolidate, and Joe knows what I'm talking about. It would do this consolidation at the high. It would consolidate, right? And then it would, you know, like kind of like come down here and then like go up and go to break high of day, and then the hammer would come down. And like that was like my bread and butter for a couple of years. Like it would push up here and then it would like consolidate for a little bit. And then it would have this one huge volume candle right up here back to 520. And then like it would also, and that candle would close at 450. Like that would be like a 60-cent candle. And that used to be the best stuff moves that I ever saw. And I just don't see them anymore. But that was the bread and butter, dude. Those were the account builders. I just like I hope it makes its round. Did that happen? Isn't that an OTC? No, it isn't. How long ago? Probably way long. You want to post a chart? Yeah, post a chart if you can. But yeah, it's probably going to be the exact chart I'm talking about. That actually be the best setup. And then it just disappeared because everyone like, you know, it was It was arbitrage. People picked up the 20 bucks off the floor. Anyway, any more questions? Dude, we need a Hawaii meetup, like another one now that I'm here. See the tits. It'd be hard to get everybody to come, of course. Be expensive. They already had one here too. Oh. But anyway, does anyone think that they might like again, like I'm not a financial advisor or anything, but anyone think that like the powerful pair, the starting late and starting small, the starting late, starting slow, kind of does it jive with anybody? Or I'm just curious. Like I'm not seeking that. Like, does it jive, or are you guys like, no, I'll never get enough trades? Because that is the downside, is you won't get a lot of trades. But it'll be the consistent. It's the trade-off, right? More money, more consistency. There's a trade-off there. Well, cool. Yeah, let me know how it goes. It's just like it's gonna be like used to just. It almost puts you in a like. The goal is to close the trade green. No, man, not at all. Do you know what island you're coming to? Oh my God, shut up. I just read that part. Oahu is the best. I don't live on Oahu, but Oahu is the best island to go to if you've never been here before. Yeah, something like that. Yeah. The one I was referring to, it's more of a 1 minute stuff, like in the same candle. But yeah, this is basically the same thing. Like if that was a 5 minute candle, it would look the same as the 1 minute setup I'm talking about. But yeah, essentially the same thing. There would be that. But oh yeah, no, this one too was just glory. Yeah. I have noticed myself. Yeah, dude, you do, dude. There is a lot of cheeks. There are a lot of cheeks to slap. Um, I have noticed myself starting way too early and scaling into the outer. Exactly how I explained. So I'm gonna try. Yeah, give it a try. Just the thing about it is like you can't be upset if it doesn't reach your line, like because the point of the trade is like take advantage of the most probable part, and the assumption is that the outer line is the most probable line to use. And normally these are, I think, the best on like the really annoying runners that just keep going and going. There is the outer line, but it takes so long to get there that you can reasonably assume nobody is waiting for the outer line. And this is kind of the best time to try it, right? Like think of like a day one stock where it's trading a whole lot of volume, and it's everyone knows there's a line that like $8 wherever, like EDSA today, where everybody knows that is a line, but everyone's like, nah, it's not gonna get there, right? It's not gonna get up there, right? That's not gonna happen. If I want to make money shorting this, I'm gonna have to short this earlier, right? And it's this kind of stuff where it's just kind of slowly trickling its way up. That where if you wait for the last line and then start, you're like EDSA would have been a perfect example. Like how much higher do you think this? I don't even want to say that because like knock on wood, they always can. But on 9 times out of 10 basis, how much higher can this go at this point to where it's not gonna pull back. Like it ran out of steam at like 775, 8. Like if you had started here and it went to 850, I mean, you get an ad at 850 and like you're still golden, right? You're still in control, and that's probably going to be a sweet winner. This is a sweet winner. So what if you only have 100 shares, right? This is a sweet winner. Like you got $100 out of that at 650, and that's not the absolute bottom, right? That's not even the absolute bottom. Like if 615 was the bottom, you know, and like say you have a patience to wait for here, right? Whatever. Like it depends on what your patience level is. I know I'd probably be out. I'd probably be out somewhere over here at around the 650 area, especially if I was under the PDT, But no, you may say you can be patient and wait through this. You can definitely wait through this because you just have your starter on, right? But yeah, like you're gonna squeeze a green trade out of that more times than not, way more times than not. It's just you got to be okay with a lot of them stopping here and rolling over and being like, I didn't get that one. That one didn't come to my line. And I think one good thing about this is that it teaches traders to be patient. It also teaches them that they don't have to like nail every day, right? Like in order to be like profitable or consistent. You don't have to nail every day to be profitable or consistent. I could have called it. I actually did. Oh, oh God. Yeah, yeah. I was gonna say. I called the top. I just didn't alert it because I didn't want to crowd the trade. But yeah, I shorted in another account like full size 775. As you know, you don't want to be braggadocious. I thought Joe was about to be like all like braggadocious. I'm like, oh yeah, me too. And then he hit with the yeah, man. But yeah, the thing about it is like shorting is innately about timing. And because it is about timing, it almost takes the idea part of the trade away. It almost makes it to where it doesn't matter that the fundamentals say it's going to come down because you can't, that idea doesn't matter because you're going to time yourself into a loss, right? Timing is what makes a short successful or a failure, is the timing of the short. By being patient on the entry and starting slow with that entry, you're almost putting the idea back into the trade because you're able to withstand essentially the entire move. Because if like that good question was like, isn't the thesis broken if the final outer line fails? Well, yes, but the point is that when it gets there, if you start slow and be patient when it gets there, you can give it all the exhaustion possible needed for it to really prove that if it's not going to work, you're going to be fine. You can cover on a dip because you're still under your threshold at the outer line. That's the point, is when you get to the outer line, you're still within your threshold of, I can withstand this risk. I'm in a healthy mindset at a high probability part of the trade. I can let the idea of the trade work out, and I have a good average. So Austin, do you use BAMSEC or just Yahoo Finance? You can determine a pig or win. I don't know what it is. I have this innate ability. I can just look at a ticker and know if it's a pig just by the ticker. I don't know where that comes from, but maybe it's just experience. You just be like, EDSA, that's a shitty company. It's totally unwarranted. You don't even know. It could totally surprise you if you go check, and you do have to check. You can't possibly, volume on the, it's all these things where you're just like, oh yeah, that's a pig. Look at the price, the ticker. I've never heard of that piece of. That's a piece of shit ticker, EDSA. What a piece of shit that is. You just look at that and you're just like, okay, that's what we're about. Because no way in hell this ever traded at $150 a share. This is all reverse split stuff. So you can just kind of look innately, but that's not saying you do still have to check. You do still have to check. But when I determine a pig, my first stop is Yahoo Finance, and the thing I look for is obviously cap. Cap is first. Market cap is first. That lets me know, like, if it's a small cap company, it's shit. It's small cap for a reason, right? Yeah. And uh, yeah, so cap is first, float is second, um, and then I look for profitability. And that's for, like, if they're unprofitable, you know immediately. Like, if they don't make money, then how else are they going to make money but by doing reverse splits and selling off paper, right? Which is exactly what this is, right? Like, and then the whole story. And so you know it's a pig. Then that doesn't even mean it's a short yet. Like, you haven't determined it's a short. Like all of my longs are on these kind of shit turds companies too. So like that doesn't mean it's a short. It just means that like it's a pig and it's going to trade like a pig. And yeah, there's certain rules that like you kind of have when trading pigs versus real companies. I wonder what the win percentage for Can Slim is right now. I don't even know what ticker that is, but definitely a shitty company. I can tell. Can Slim. Market cap at the thousands because Bao can buy. Yeah, I mean anything under 100 million is pretty. Like it's gonna be definitely good. Like anything under like 300 million is still pretty small. But like you get up a little bit higher in that, and they can then become profitable small cap companies, and you have to check. So you always have to check. What time are we at here? Oh, we still got time. Probably another 10 minutes of questions if you guys want, or we could end it here. It's all up to you guys. The old SBOT. Yeah. Calls anytime or only when you announce it? Okay, so yeah, I guess I'm glad I got this question because a lot of times I post in the chat, I'll post like my PMs are open, right? That means that I'm willing to private message people. When I say that I'm doing trader calls, that's when I'm okay to do calls. And a lot of times people will say like I'm down, I'm ready when I post about my chats. I'm like, well, I mean, send away, bud. Like I'm like, but there's a difference. The reason why is like I trade in Hawaii, like sometimes I talk really loud and I don't want to wake up anybody, right? Like I talk really loud, and so like and sometimes the lawnmowers are going. Like if it's a certain time, so like if there's a window that I like to do my calls. It's like before lawnmowers goes off, and it's before I feel like I'm gonna like shout because I live in a very quiet neighborhood, and I don't want to like wake anybody up. So that's why I don't do calls. Like I like there's a specific time period when I do them. So good question. I'm glad you did because that's. But PMs are normally always open. I'll normally get to them. General guidelines for cap and floats. Anything less than $1 million, and I'm ultra careful. Anything over 25 million, and I'm skeptical at how. I'm skeptical at, or like anything over 20 million and stuff, and I start to get skeptical about its teleportability. That's a good guideline or general rule of thumb. I start looking for more of trendy trades the higher the float goes. The smaller the company, I tend to follow the day 1, 2, and 3 rule. Although it tends to work for large caps too, especially like IPOs too. But for the general rule, like it's a classic setup, the day 1, 2, and 3 rule on the smaller caps. The smaller floats, I guess, I mean, I don't think this applies to a lot of people, but as a general rule, I don't like to be more than like 1% of the volume. So like if it's a 500,000, if it's only trading 500,000 shares, I don't want to be in more than 5,000 shares. Definitely not. Like I probably won't even be at that volume, but it makes sense. A little higher you go, or lower. Yeah, like if it's, I don't really want to be in more than 3,000 if it's only traded 300,000. Like I don't know. I just like to keep it around 1%. 1 to 2% max. I guess I expect spreads to be shittier the smaller the float. And in situations like that, I typically want to always add liquidity to my trades because like fills matter in those kind of situations. I don't like on CTRM, if the spreads were shittier, I would not have been chasing that 40 break, even if it was tempting, because I probably would get like 56 average or something like that. Like that, it judges how I, on situations of when I'll chase or not. That's about, I guess, the important stuff. And Tom had said, with that strategy, I think I would be better able to deal with an overshoot of the outer line because that would be a bullet or two left. Yeah, and that's the idea, is like if it does overshoot that outer line. See, a lot of times, the reason why I like to start late and start slow at the outer line is because a lot of people bank on the outer line to hold. And a lot of times this can be like the final push up, right? This can be the final push up, and you got to be able to survive it. Like you're going for a probability trade. You have a small enough size to where you can survive it. You have to be able to utilize that edge if you're going to use it. Otherwise, why do it, right? Like, why go in late and not be slow? Just like, if it's at the outer line, it's the most emotional area. You have to make sure that in the most emotional area that you're the least emotional. That's the point. That's the point of the trade. And I think it's the most consistent. But the thing is, you have to be patient for it to get there, and you have to not start early, and you have to not, be like, oh, I never get the good fills, because I promise the one time you're like, oh, I never get the fills. I'm going to start lowering the lines. You're going to lower the lines, and it's going to there's going to be the perfect trade. Does that mean you don't put a fantasy order? No, you can. Actually, why not put the fantasy order at the outer line? You can, it's a good example. Just put the fantasy order out there. How do you base your stop when you're going off of the outer line? So this is, I guess, where it's, you can have an ultimate stop, but you kind of want to let the exhaustion kind of play a little bit, and you want to have a little wiggle room with the exhaustion. But what allows you to do this is because you are only small, right? It becomes almost an unsustainable trade at that point. But you're in so small, and you're not adding into necessarily parabolic moves. You might let it do its thing, slam, and then maybe put on an ad, maybe not into the parabolic, but after the parabolic fails, you risk the high there, and you can do that because you're small where everyone else just covered, right? So you can have an evolved kind of stop in conjunction with. You always have to have an ultimate stop where it's just it's wrong, you're wrong, right? So there's a little, I guess, flexibility in the stop there, but you want to have an ultimate for sure, but allow that. Make sure that stop allows for wiggle room, and maybe it's the next $50, right? Maybe it's the next $50, or you know what I'm saying, or it's the next $1, but you can handle the $1 because you only started a couple hundred shares, and you can put another couple hundred shares on 50 or 60 cents later when the price gets really emotional, right? And that's kind of what you see Bao do a little bit. So you do have that play. You always want to have the ultimate stop ready and known, and you can even have the ultimate stop in there. But most of the time, I use an evolved strat. Right, I'll use an evolved stop strat. So if it parabolic at 8 and went to 825 and then slammed hard, I might put on another one right there and say 825 is it. Maybe that's it. Maybe I give it to 850 after that, and I let it go and test that one more time, and then expect it to maybe stuff the 825 and giving it to 850 and it slams, right? When the outer line was 775, now you're giving it 75 cents of room, but you are giving it the wiggle room to work, but That's not the best risk to reward, but the idea is now you're going for probability to be your saving grace in the strategy over time, right? It's supposed to be the highest probability trade, not necessarily the best risk to reward trade. But I think it does rein in the risk a little bit, because most of the time it'll probably just stop there. Do you ever remove your entries for the fantasy orders based on price action? As a general rule, no. But if it's something really crazy, you bet your ass. Like something like OPGN, like if I had an idea, like it depends. If the price action, from the time I set the order there, if the price action is trading a certain way, but all of a sudden it starts to trade a different way, like the ask, all of a sudden it starts getting really thin, really choppy, or or it starts halting or really starts getting exponential, I might consider being like, you know what, F this trade. I maybe not, I might not move it. I'm more likely to just be like, F this trade, right? I'm rarely going to change the order and say like, oh, well, maybe a little bit higher, because now that's just me being afraid. That's not me trusting my lines, and that's me trying to be afraid. And if you move the order, now you're going to regret it if it goes to that order, stops, and comes down. It's much better to just have the order in there and stop out. If you're not wrong, that'll save your sanity. You'll be like, okay, the trade didn't work, but I pre-planned the risk and it worked out, or it didn't. When more likely than not, I'm just going to be like, you know what? I don't like this anymore. Like I am no longer this is not me. I'm not going to tackle this. This has gotten, like, maybe in the beginning of the day, it was trading on lightish volume and you're like, oh, let me put the fantasy order, pop up there, I'll come down. After, and like, but since then it slammed really hard, and then all this volume traded, then it comes back up. Now that wasn't in the original cards, right? It wasn't supposed to already tank and then come back up to my line on some renewed strength, right? That, that might change my thesis a little bit, but as a general rule, I'm not changing the order, because you're normally just changing it in fear. And what's to stop you from changing it on like your second? Like, if you'll change it the first time, why won't you change it the second time? It's just fear that's making you change it. And if you're afraid now, what makes you won't be afraid later? You got to trust yourself a little bit, right? I'll only remove the order if I feel my thesis isn't valid anymore. Good question. Very good question. I may have missed this, but do you add after the trade starts working? And if you do, where do you add? So I didn't go over that in this webinar, but I have in others. So my rule on ads is I only like to add when I can lower my risk. I only add if I can lower. So let's say I was short here. Let's say I shorted into EDSA, right? Here at 725, and my risk is 8, right? This is now my risk. Now, when it tanks over here, I might consider an add over here, but I'm only going to add if I feel comfortable moving my risk down to 740. So that's my general rule of thumb, is I only add when I can feel comfortable moving my risk down, not moving my risk down because I added. Make sure that they don't flip. Like, you're moving your risk down because you added. Like, only when there's like a level that kind of makes sense to move your risk down, that's when I like to add. Another rule of thumb is if I wasn't in the stock and I wanted to get in, where might I get in and risk a certain level? And it's the same thought process, right? That's now the risk of that trade. So essentially, I only add when I'm trading 2 trades at once. Like, I still have this trade risking this trade, but now I have this trade risking here, but I'm also just moving this risk up to here because I think this will invalidate both pieces. So I only add when I can lower risk, and this also works in the when I talk about an evolved risk. Like, sometimes, and it's a more advanced technique, is when, like, you always have an ultimate stop, but I don't often want to take my ultimate stop. I will, but I'm hoping it doesn't come to that. And I'm typically really small in, if that, so that if that does happen, I'm not, I'm not going to be hating myself tomorrow. But when I have an ultimate stop, but I know I want to be in because I feel like this action is not sustainable. I have an ultimate stop, of course, but I'm waiting for some price. I'm waiting for the action to evolve to where I feel comfortable adding some size and using that to risk. Now I have identified the risk, or essentially moved the risk down from the ultimate to now my preferred stop I'm going to use. If you stable risk and the stock is parabolic to that level, shows it may go against you, you fill and now you are average. Your plan is to minimize your loss by recycling. Hope that makes sense. I have to read it one more time. If you stabilize risk and the stock was parabolic to that level, and then it shows it might go against you and go even more higher up, you fill and now you're out. Is my plan like, so if I think like I'm wrong, am I going to minimize my loss by recycling? No. If I think I'm wrong, I'm bailing. I'm absolutely bailing, right? I'm definitely bailing. Like if I think I'm wrong, I'm totally bailing. If I think like if I'm still not sure if something is beating my expectation of what I thought was possible, but I still think I might be able to get I still think I might be right. There's a possibility, and I'm not full size in. I might get to the full size that I want to be with this level of uncertainty, and if it does pull back, I'm likely recycling that a little bit just because just because it pulls, I'm not taking that as, oh, the trade's good now. Yeah, I'm probably recycling that, but if I ever think I'm wrong, like I'm not waiting to recycle for sure. Like because and not necessarily because like yes, because like it's bad rule, like it's bad, bad for your psyche, bad for your mentality on following rules, bad for the process. But I just know tomorrow I'm gonna regret myself. And I know that's gonna just weigh on my brain way more than the loss ever will. Knowing that I could have avoided something but I didn't because I got stupid. It's like the worst is when you know something, when you identify that you're doing something wrong and you don't fix it before it's too late, and then when it's too late you're like, I could have fixed it, should have fixed it, but I didn't, and of course it didn't work out. Like that's the worst. That's the absolute worst, and that's what I try to avoid. Yeah, so it all depends on, if I think I'm wrong, I'm out. If I'm still unsure, I might give it a little bit more play, but if I get into the unsure part, I'm definitely recycling. Even before I'm proven wrong, I'm probably recycling. Like trying to take cover dips, short pots, trying to do what's right. Now these, by the way, these trades that you guys are talking about, these are the kind of trades that aren't my favorite trades. Like my favorite trades are the ones where, I buy it here and it just flies up, right? Those are the best trades, right? Those are the trades. Like if you notice, I try to go for the easiest possible trades. I'm like a chicken when it comes to trades. I want the easy trades. Like I'm like a shark. Sharks want the easy kill. Like I don't want to fight stocks. Like I really don't. Like it's not fun. Every time I fight stocks, like it's like I can't remember. Like you can remember stocks where you fought it and got bailed out, but like you remember so much more the stocks that you fight where it's just like it just dragged on and on and on, and you ended up just like losing money on it anyway. When you could have just been like, well, shit, if I was going to lose money, why couldn't I have just lost less money and saved myself all that stress, like cycling and all that crap? And that's why, like, if I identify I'm wrong, like, that's it. Like, I'm not fighting. I'm like CTRM today. I was like, nope, like, not gonna, like, I want an easy day. Like, over making the most amount of money, I want an easy day. Like, I didn't become a trader because I wanted to make the most amount of money, right? If I wanted to make the most amount of money, I would have tried to go up the corporate ladder and like become like a CEO, like or like like I mean, because I want to be an entrepreneur, of course, like that's in my spirit, but like I don't know what I could have invented. Like I'm not much of an inventor, but I mean, maybe I'll be a writer one day. I don't know, like something. But like, if I really wanted to make the most amount of money, I'd be like, I try to get up the corporate ladder, get shares, like fuck it, whether it be McDonald's, like Walmart, whatever. Like get up there in the corporate ladder and start making big money. But like, I want to be a trader because it's fun money, easy money, fast money. That's the benefit of it for me. I'm not in it for the total money. I'm in it for the quick money, for the easy money. Easy. It's the hardest easy money ever. It's not easy, but that's the allure of trading for me. All right, so I think that's a wrap, guys. Um, Thanks for coming, guys. Thank, oh god. Thanks, guys. Glad you enjoyed it. Hope you did. Anyway, have a great day, everybody. Or night. See you guys tomorrow. All right. So what do we got here? Let's pause the recording.